everyone, and welcome to the latest episode of Tech to Transform, the Mantis podcast. This episode is a little different to our usual format because Mantis PR's Managing Director, Eleanor Willock, joins me in interviewing some sector experts on investment in tech businesses. Our listeners are from all stages of the investment cycle, and Mantis's clients run from very small startups to unicorns to private equity-backed companies. So we wanted to take a look at the investment cycle and the current investment landscape as we look towards post-pandemic recovery. In this slightly longer episode, we speak to Monika Radclyffe, Centre Director at SETsquared Bristol, Neil Shah, a tech business specialist at the London Stock Exchange, and Henry Humphreys, a partner at Humphreys Law. Take a listen. Eleanor, thanks for joining me on our next podcast. It's nice to not be alone on this one.
You're welcome. You don't ever have to feel alone with me around, Rebecca.
And so you've been helping me put together our next podcast, which is on investment in tech businesses. So we've actually got three people speaking on this one, haven't we? Did you just want to run through them with me?
Yeah, of course. So thanks for having me on the first podcast I've ever done, let alone the first podcast I've ever attended. I've really enjoyed the process, and I can see how much work you have to put into it now. So well done. We spoke to three people to try and create a sort of a narrative through the investment industry. We spoke to Monika, who's the lead at SETsquared, and I know you're going to talk a bit more about your conversation with her. And then I spoke to Henry Humphreys, who's a partner at Humphreys Law, which is a firm that specialises in tech investment and media investment and getting clients through that process, whether it's securing their first round of seed funding or Series A, Series B, right through to helping them when they're listing. And then finally, I spoke to Neil Shah, who's the Business Development Director for tech businesses at the London Stock Exchange. And he gave me some really valuable insight into how the stock exchange process works, what kind of companies list, and how that works, what kind of things that investors are looking for, and how the process works. So I'm hoping it will give our listeners a really good background into what the tech investment landscape is like at the moment. Me and Neil talk a lot about the TechNation report that came out a couple of weeks ago, which the London Stock Exchange contributed to. And the podcast also looks at something that I'm personally very interested in, which is the idea of whether investors are investing in people or products and services, and how that meshes together.
Yeah, brilliant. Absolutely crucial conversation at this point, isn't it? So we're going to kick off with Monika Radclyffe, who's the Centre Director at SETsquared Bristol, as you said. SETsquared is a global business incubator and accelerator that helps startups and innovative businesses in the UK. So we talked about the biggest changes that organisations like SETsquared have made in the UK and how investors balance their decision-making processes. So we're going to kick off with that one. So take a listen, everyone. Okay, Monika, thank you so much for joining me. I wonder if we could just start with you just introducing yourself and telling us a little bit more about your background.
Sure. Thank you, Rebecca. So my name is Monika Radclyffe. I am the Centre Director for SETsquared Bristol. I've been in this role for the last 5 years, but really my career for the last 15 years has been all about startups. So I've worked with several startups. I've been involved in a number of incubators, accelerators, co-working spaces, as well as corporate innovation, helping larger organizations accelerate their pace of innovation by working with startups as well. So it's always been around this field of work.
It's fantastic. And could we start with you telling me just a little bit more about SETsquared and then what it's been doing, what it's been up to?
Of course, yes. So SETsquared is an incubator for high-tech and high-growth businesses. We were established by University of Bristol in 2002. So we have a really long history, actually, if you think about, a lifespan of incubators, almost 20 years now we've been in the market. We are part of a partnership of centres around the Southwest. So SETsquared partnership consists of centres in Bristol, Bath, Southampton, Surrey and Exeter. So it's great being part of that network. And what we offer is we offer business support to early stage companies, and our model is very much founder centric.
Fantastic. And as you said, SETsquared has been around for quite a long time. So what are the biggest changes that organisations like SETsquared have made in the UK, do you think, in recent years, and focusing on our sort of startup community?
Sure. So in terms of the changes we made or the impact we've had, I think the best way to describe that is by demonstrating our statistics. So for instance, the companies that have gone through the SETsquared program are 4 times more likely to succeed than those that haven't. Right now we work with about 85 companies within SETsquared Bristol. But over the last 3 years, we've worked with about 125 who have collectively raised about £200 million. And also generated £140 million of revenue. So that is really the impact that those companies have made. And I would like to see that this is the biggest change we kind of contributed to. And you may be wondering how do we do this? And as I said, we have very founder-centric approach, and that's how we different than typical incubators and accelerators that have very much sort of time-bound programs that a number of companies join for. We have a very different model where we have a huge array of different activities. Our schedule is packed with different meetings or mentoring sessions or review panels and workshops and events. But as I said, it's all founder-centric. So we focus on what the founder or the founding team needs, what their business really needs at this point of time. And then we try to tailor the package to what they need. So they kind of come in, they look at what we offer at our package of activities, and they mix and match. So that's how we're different. And I think that's one of the sort of changes we introduce in the market.
Brilliant. And are there any sort of notable trends? So common things that a company already has or displays when they join the SETsquared process? And are there any sort of common things that they're lacking? As you said, it's very kind of founder-centric. So are there kind of common trends between the different businesses that you work with?
Yes, definitely. We do have entry criteria. So actually the common trends are demonstrated by those that meet the entry criteria to access our incubator. So we only invite companies for membership ones that are high tech. So they need to have some sort of a product or service that is very unique in the market. So they have to be building some intellectual property. So that's something that they have to possess when they enter. They have to be high growth. So we have to see their pathway for success. We have to see how they can really achieve success and have ambition for that. If they just want to be a small company, that's probably not the right place for them. And we have to see how we can help them. So within our areas of expertise, they have to be sort of the right advisors that can enable them to succeed. So this is what we're looking for, and this is what those companies already possess when they join us. What they don't have is exactly that ability to scale. They have ambitions, they have vision, but they may not know how to get from A to B. And that journey is never straightforward, is never a smooth path. But we dare to help them figure out how to get them. And that may include lots of other things, lots of various things. So for instance, some companies may need help with fundraising, they're looking for funding, so they need to figure out how to become investor ready, how to access investors. Other companies may not look for that at all, may just be looking at how to grow organically and generate revenue. So we may be helping them with sales and building that organic growth. And that's where that founder-centric approach is very helpful, because the companies are very different in terms of what they help, but that's usually what they need the most is that ability to figure out how to scale, how to grow.
Brilliant, yeah. And you mentioned investors there. When we think about investors, they're looking at lots of different things, aren't they? That founder-centric view, also personality and the team, the wider team, as well as the products and services and their potential for growth and ultimately success. So how do you think your investors balance their decision-making processes? There's a lot to think about, isn't it?
That is a really good question. Yes, the investors are looking at the founder and the team, and they're looking at the product and service. But I think what's even more important is assessing how commercially successful the business can be. Because eventually investors are looking to put money in so that they can get the money out, right? They're looking for return on investment. So for them, it's all about, okay, how do I believe, do I believe this company is going to be successful? Will they grow? Will they get to X number of revenue? But what's also really important to remember is that the investors only get the money out when the company exits. So when the company gets acquired. So it doesn't actually matter, that they've grown from 1 to 10 to 100 people. Unless they get an exit, the investor doesn't get the return. So it's also about determining at this stage how likely the company is to be acquired and how quickly they can get to that point. So I think that's number one consideration for investors. What is the likelihood of that happening? But of course, without an excellent founder or a founding team, that is very difficult to do. And if someone is a serial entrepreneur, again, they're more likely to do it again. If someone's got a really good advisory team around them, great mentors, then again, that increases that likelihood. And finally, to add to that, the product and service are of course very important as well, because if you don't believe this product or service will be successful, then of course the company won't achieve that scale of growth and eventual exit. So all of those aspects are important, but I think we have to start thinking from the point of an investor, what is it that they're trying to get out of it?
Absolutely, yeah. Monika, that was really interesting. Thank you for that. Thanks for your time today.
Pleasure. Thank you for having me.
Hi, and welcome back to the Mantis Tech to Transform podcast. I'm here with Neil Shah from the London Stock Exchange today. Thanks for joining us, Neil.
Thanks so much for having me, Eleanor. How are you doing today?
I think I'm all right. It's Friday, the day that we're recording, so I think we're probably both feeling like we need our weekend, and Easter holidays is coming up, so it's going to be a good next couple of weeks, I think. How about you?
Absolutely. Happy Friday. It's been one of those weeks where this weekend's much welcomed.
Right, exactly. I completely sympathise there. So before we start, and as you know, I've got a whole barrage of questions for you. Perhaps you could tell us a bit about your work at the London Stock Exchange and how it relates back to technology.
Absolutely, Eleanor. So my name is Neil Shah, and I'm a senior manager at London Stock Exchange in the primary markets team, focused on business development in the tech sector. And what that means is that my day job basically involves speaking to founders, venture capitalists, and private equity firms, and management teams and boards to help them understand what their options are with respect to an IPO on our market. And now we meet so many founders and management teams that have never dreamt of doing an IPO. It may not even be on the radar. And others at the other end of the spectrum where they want to list in 3 weeks' time, and it's really just navigating the process, putting these guys in touch with the right advisors to help get deals done.
Fantastic, thank you. That's really helpful. I'm so glad that I got in contact with you, especially in this past couple of weeks, because a report came out this week from TechNation, the TechNation 2021 report, which LSE has obviously contributed to. And I wanted to ask you a couple of things about it. We've been discussing on email that and hopefully people who are listening have read the report, and if you haven't, it's widely available on the TechNation website, that the UK obviously comes across from this fantastically positive report as a really great place to grow and scale businesses. And there's lots of sectors covered. One sector I noticed didn't get its sort of own sector performance was GovTech. There was health tech and there was EdTech, but there wasn't GovTech or public sector tech. How do you feel that sector, in terms of going to work with the London Stock Exchange, going to IPO, is going to fare in the next 12 months or so?
Great question, Eleanor. I've been following GovTech for, I'd say, the best part of 10 years. Civica was a client of mine at Dresdner Kleinwort, and we helped they come off the market actually and get some funding from 3i for the first management buyout. Now that business has grown to, I think, well over 100 million pounds of EBITDA today.
Yeah, it's a huge player.
Quite a success story. And GovTech was in favor back then, kind of went out of favor, and has come back into favor today because ultimately the government is one of the biggest consumers of technology. So do I see that going away anytime soon? Absolutely not. And if you look around the country today, many councils have been struggling with their finances. Clearly, being able to automate processes and improve technology is one way in which the tech community can help these councils, but also national government. So I actually think it's one of the most exciting areas of tech today. Now, it doesn't come out because a lot of the tech vendors supplying government may be horizontally focused, right? You take a company like Blue Prism supplying robotic process automation technology, or CRM vendors such as Salesforce, clearly selling to lots of different industries, but government being a clear part of them. And there's so many IT services companies focused on delivering these horizontal solutions within government. And in fact, my last IPO was a business called the Panoply, and I believe you know Ollie Rigby. So look, I think what the Panoply have been able to do since IPO is phenomenal. I certainly believed in the story when I was a banker, and it's good to see that come to fruition. And I think that just highlights what's achievable. You can look at not only the Panoply, but Kainos as well, and other vendors into the government space. Everyone is benefiting from this rising tide for digital transformation.
Yes, digital transformation, I think, is the buzzword of the next couple of years, isn't it? It's certainly something that we find ourselves finding different ways of how to write it every week, put it that way. So relating all this back to PR, as I'd like to, if that's okay. Hope this isn't too much of a tenuous link, but when it comes to the size and shape of a PR campaign around an IPO and leading up to one, and then going through the process and post, are there any commonalities that you see between the companies that you're working with? How does PR help or hinder the IPO process? And is it even something that you are involved with considering?
Yeah, Eleanor, I think PR is hugely underrated. Now,
amazing, love to hear that.
How important financial PR in particular is to an IPO process and getting a PR firm involved. So you can have the best product, the best management team, Salesforce, but if you can't tell your story in a simple language to investors, particularly in the UK, where, let's not forget, the majority of investors are generalist investors, then you're going to struggle to raise finance. And that applies equally to venture and private equity as it does to public market investors. So I think having a PR firm involved as a sounding board to make sure that that story is crisp and concise is hugely important. And also being there to provide some presentational training to management teams who may be used to speaking to experts when they're selling solutions, but it's quite different being able to distill why a particular investor should part with their cash into your company. And I think that's where that the work that Mantis and other PR firms do is hugely important.
I think that's very interesting. When we're working with our clients, either through MBOs or IPOs or other rounds of finance, there's often a financial PR company working alongside us, handling the financial and investor press. And we're tasked with getting the same story out to our press, which might be split between us and the finance PR company in terms of nationals, if it's a national worthy story, or we'll be talking to our industry press, and they'll be taking the story back to investors. But when you're in a lead up to an IPO, who's your target audience? So who needs to read about that company in the press? Do investors want to read about how popular the product or service is with customers, or do they want to read about the the founders and the personalities and the worth of the company?
It's all of the above, really, Eleanor. As an investor, you want to understand that the product and or the service is liked by the public, and there you might be looking on Glassdoor for reviews of the management team as well.
Really?
How they're received. But I think that the more press, the better. And I just don't see enough of it today, especially at the small and mid-cap end. I think clearly if you are THG or Moonpig, you're going to get coverage no matter what. But if you are let's say £100 million market cap business, will Investors Chronicle or the Telegraph pick up on you? Not necessarily. And I think just getting your story out by whatever means possible in the press, but also those trade journals, it is important, because investors will be looking across the piece. And it's not just what customers and partners think. It's what the employees and other stakeholders think about the business as well. And we don't see that founder narrative coming through often enough. So in terms of what we're seeing today, it's more founder stories, more investor stories, particularly where you've got a venture-backed business that everyone in the private world may be aware of, but its story is just not well known in the public investor community. So will a fund manager at AXA or Canaccord or Marty know that story? Potentially not. So I think getting that narrative out there is incredibly helpful.
Okay. I've always wondered and never been able to really put my finger on whether the personality and the gravitas of the founders is more or less important than the capability of the product or service to make money when it comes to securing anything. In PR, certainly, if you're pitching for new business, the value and worth of my services are best put across by people who know them and are passionate about them. So we would tend to, as a business, put our most experienced people in the room. But we're consistently told that it's the more junior person in the room with the most to say that impresses. So when you're an investor, or and IPOs are on the horizon, are you paying attention to the founder's personality and what they get up to, and what their experience is, and how they think and what they feel about their industry?
Absolutely. You want to take a holistic view of what the leaders are doing in that organization, across the board, and are they acting as they say. But equally, to your other point, we want to know what the tier below looks like, because you want to know who's running the business, or who's running the comms, or
right.
Who's
doing the work.
Who's doing the work, and that applies to banker selection as well, right? Where you may see the sales team, but who's going to be left actually running the process. The same with an audit. So I think whenever these big decisions are made, and for most companies, I imagine an IPO is probably the most significant transaction that we'll be doing. It's important to get all these points across.
Good, fascinating, thank you. My last question: what's the biggest myth about IPOs? So what question do you find yourself answering over and over again when you start working with a new client?
Yeah, really how accessible that option is to so many companies, and it's just overlooked really through lack of knowledge. Now, that's our fault for not being as communicative as we could possibly be at London Stock Exchange, and partly why we're really banging the drum day in, day out to make sure that more and more companies know that this is a realistic option for them. Our junior market AIM turned 25 last year, and really often alternative to venture capital and private equity over this last 25 years. There's some businesses that thrive clearly from having a VC or P shareholder, but it's not the only answer. And there is an alternative route, which is having everyone play in a flat capital structure. Now, clearly, the investors are different. With VCs, they can open doors to other portfolio companies. These investors have hands-on experience in even running some of these companies, whereas public company investors tend to be quite passive. And so there's no one answer fits all. But it's important, I think, for founders and management teams to do their research and know, what's open to them. And just to give you a sense today, we've had companies with revenues of £9 million in the form of Koof, which delivers mental health services online. Successfully. They were backed by private equity. So we've got nothing against venture and private equity backed businesses, and we can provide an exit for their shareholders, but it's there's no prerequisite to be a unicorn or a decacorn to list in London. And I think that's not always appreciated.
Decacorn. Okay, we're moving into Transformers territory now. Love it.
I had Soonicorn and Centacorn added to my vocabulary recently, which I'm still trying to figure out exactly.
So Soonicorn, I'm guessing, is somebody who's soon to be a unicorn.
That's right.
Centacorn?
Yeah, no idea.
Is that like half horse, half unicorn, half man, half unicorn? Like a centaur?
Your guess is as good as mine.
Yeah, okay. Maybe we could put a prize together to write into the podcast and tell us. But yeah, that's I'm just going to go with no corn. That's wow. Well, listen, Neil, it's been a real pleasure. I've learned a lot, and I'm really enthused, especially with LSE's contribution to the TechNation report about the prospects for our industry as a whole this year. So thanks very much for explaining it a bit more to our viewers and listeners, viewers and listeners. And I hope we'll get to speak again next year about what 2021's been like.
Thanks so much for having me, Eleanor. Look, this is a really exciting time for London Stock Exchange. We've had 6 tech and consumer internet IPOs in the year to date. We had 8 in all of last year.
Wow, that's something, isn't it?
We're going to see a step change, and this is an option available to so many companies. We'd love to meet more of your clients and explore this with them. Thanks for having me.
Thank you very much. All right, thanks, Neil. Bye.
Bye.
Hi, welcome back to the Mantis Tech to Transform podcast. I'm Eleanor Willock, the Managing Director at Mantis PR, and with me is Henry Humphreys from Humphreys Law. Hi, Henry, how are you?
Hi, Eleanor. Yes, I'm very good, thanks. Very good. How are you doing?
I'm fine. I'm absolutely fine. Perhaps we could start by you giving our listeners a little bit of background about you and Humphreys Law, please.
Sure. Well, yes, first of all, thanks very much for having me on your podcast. So I'm Henry Humphreys. I'm the managing partner of Humphreys Law. We're a law firm focused on the venture tech economy. We've got offices in London and Bristol, and we do a great deal of work in and around the venture tech space, which in simple terms means that we act for technology companies who are raising venture capital and venture capital type investors who are investing in technology companies, and all the different types of investors, family offices, VCs, VCTs, some private equity firms, high net worth individuals, angels, syndicates, the whole range. And then we like to act all the way through the funding rounds. We do get involved in some seed stage type transactions, but generally speaking, we're involved at sort of late seed, Series A and beyond. And then ideally, we especially where we act for the companies, we will act all the way through the funding rounds to exit. And then we do a great deal of M&A at the top of the cap table, where people buy and sell, or increasingly look at the capital markets with a view to IPOing or things like that. And then that's the corporate side of what we do. And on the commercial side, we really do anything involving intellectual property, buying it, selling it, assigning it, creating it, monopolizing it in various different ways by registrations and so on, and then defending it or litigating it if necessary. And then really anything, again, involving data protection and privacy. And most tech companies these days have got some sort of proprietary data sets that they are looking to help monetize in some way, shape, or form. And then obviously fintech's very big, particularly in London. We've got lots of fintech clients, and almost all of them need some help on the regulatory side. So we do a lot of regulatory work as well. And then to finish off, we've got a great tax team who do a lot of tax work, but in particular management incentive work where people are being granted equity in some sort of tax efficient way through an EMI option scheme or a CSOP or various other schemes with acronyms of various kinds. So that's up to us really, very focused, very specialized, but looking at the venture tech space as a vertical sector and advising throughout.
Well, as the leader of a very niche business myself, I appreciate a good niche.
It's all about the niches.
It is. It's all about the niche. I'm pleased we're getting to speak today because for this podcast, we're looking at the entire investment structure and community. And what I'm particularly interested in finding out is your experience of what the mood is amongst the tech investor community at the moment. What's it been like for you and for your clients for the past few months?
Well, it's an interesting question. I mean, really, since the start of COVID, it's been a game of two halves, to use a terrible metaphor. But I think for some sections of the economy, they've done very badly. I mean, you think about pubs and hotels and so on that have had to shut their doors. But across the sector, most technology-related businesses have done well, if not incredibly well.
Right.
One of the reasons for that is that most, certainly earlier stage tech companies are trying to do something where they're looking to change behaviors or disrupt a particular industry, generally through digitizing stuff and getting things done online rather than face-to-face and in person. So COVID, in many ways, for many of them, came along at an incredible time where their business models were really predicated on assuming that human behavior would be changing over the next decade or so as people went more online and abandoned traditional ways of doing things. And then, of course, COVID just massively sped that up. So for many of our technology clients, not all of them, but for many of them, they've done very, very well during COVID and seen their own sales and revenue shoot up, but have been able to raise large checks and are now well capitalized, and have very healthy looking balance sheets. And really at the moment that is continuing. I mean, there's a great deal of activity in the markets, more than at any other time in the UK. It seems perfectly possible now to go out and raise really quite substantial checks for Series A, B, C type rounds.
Right.
And then for the larger rounds, increasingly looking at overseas investors coming in to lead or write those checks. But the capital is there, so it remains a kind of great opportunity. And personally speaking, I don't see that changing anytime soon, particularly whilst interest rates remain so low.
Okay.
And such a lot of capital is being raised by the funds themselves. So I think now if you are a founder of a technology business with a good business plan and a good management team, there's probably never been a better time to be trying to execute than right now. I mean, that's not to say they'll all be a success, and every journey will be out without its difficulties. But certainly compare it to the start of my career. In the last 2 decades or so, where it was very much harder to raise substantial sums, the market here was really in a sort of nascent form for tech. And really,
I think we're on the same trajectory there. I started in tech PR right at the start of the dot-com boom, and when shopfront tech businesses just became worthless compared to their online compatriots and stuff like that. So it has been a curve, hasn't it, that we've both experienced. But something you said there just reminded me of what my next question was going to be, which is you talked about having a strong management team and a good business plan. Are there any typical behaviors or traits that you're seeing in high growth companies that are hitting their investment targets, where you notice those traits or behaviors and think, yeah, you're going to go far?
Yeah, I mean, that's another great question. I think you have to be slightly careful in answering that question, because obviously we see and act for the companies that are successfully raising checks and often raising exponentially sized checks as they go through the funding round. So generally speaking, we're sort of seeing the success stories. And I mean, obviously when our clients are in trouble, we are helping them with restructurings or, doing various deals of varying kinds, but perhaps, less so. And obviously, if you're being less successful, you've got, fewer funds available to be paying for external advisors. But I mean, I think, look, difficult for us to say again, because as lawyers, we're there to advise on the legal side, and we don't get involved in drafting business plans or helping our clients actually go and execute their business. But I mean, anecdotally, I would say, the teams that seem to do well are, or a theme and factor within teams that seem to be doing well is their ability to execute accurately, quickly, and efficiently, and get stuff done. And if they don't have that, and they're unable to move quickly and unable to execute accurately, then they've got real problems, for starters, and they're probably going to have problems raising capital anyway. So there's that side of things. I mean, I'll probably say as well, hire a good lawyer. But I mean,
and a good PR agency. I agree.
And a good, yes, exactly. Yeah, and a good PR agency. But no, I mean, I think another theme within teams, I think that do well is sort of know how to use advisors.
Yeah.
And obviously, when you start out as a venture, there's a balance between, you don't want to spend any available capital you have on paying for professional services. But equally, nobody's ever got all the way through to exit on their own. I mean, it just doesn't happen. So you need to build around you a panel or group of advisors who can help push you forward. And the earlier you start doing that, the better, frankly.
Yeah.
Not least because the longer you know someone, the more you know about them, and know whether you want to work with them or not. And I can tell you from a legal perspective, the best clients we have often are the ones that have been with us for years and that we've helped from sort of seed stage all the way through.
That must be rewarding.
And it's very rewarding, but it's also good for the client because it means we sort of know a lot more about the company, and that often means we can be more efficient as well, and therefore costs are lower. Because we already know a lot about what's going on, so there's not a vast amount of sort of reading in or thinking about it or making assumptions and anything else. But there we go. So hire some good advisors, and then of course even the best ideas and the best management teams probably aren't going to get anywhere without the capital to do it. Mm-hmm. That's not to say you have to raise venture capital, and for lots of businesses, it is probably the wrong option. But for fast growth tech businesses that kind of want to take over the world and become the leading name or thing in whatever it is they're doing, venture is often the only way you're going to be able to do that, or the main way you're going to be able to do that. So obviously, finding investments and your ability to find investments, and that can be a very time-consuming thing. So again, a feature of well-functioning management teams is either a division of responsibility in terms of who's going to organise that, or at least a way of dealing with investors and looking for them, finding them, bringing them in. It can become a full-time job, especially if you're doing around every 18 months or so. Starting out in that journey, I'd never underestimate the amount of time that will take. And again, back to having a good set of advisors, that's one area where your advisors can actually help you and provide a sounding board, and if necessary, somebody to stand in the middle, or at least assist with that process.
Okay. My last question: what tech, in your experience, or perhaps in your client's experience, do you see any one type of technology being particularly attractive to the investment community at the moment?
Well, it's flavor. There's always a sort of flavour of the month. It seems. I mean, if I was any good at picking investment stocks, I wouldn't be a lawyer. I think I'd probably make it very very bad venture capitalist if I was. I mean, look, we see, we act for people investing or receiving investment across the sort of whole tech piece, and it seems to go in waves. And then again, we only see a sort of small part of the market, or part of the market. But obviously, software is still hugely hot. I mean, the great thing with software is that depending on what you're building, it's probably unregulated, or at least the writing of the code and the building of it is unregulated. And as has been said by many other people who are far brighter than me, but I mean, if you've got as in when you sell one bit of software, you've still got exactly the same amount of software left. So it is proved to be an incredibly remunerative business model for those who are able to build stuff that people want.
Easy to scale.
Because if you can get it to scale, it becomes hugely efficient in terms of generating cash and
I think sometimes these firms can't grow fast enough. If I talk to the recruiters in software development, often it's impossible to find the large scale teams to service the need once particular sectors get going in terms of their growth.
Yeah, it's a good place to be. If you've got the skills, you've got the skills to go and write code in the right way, then you can do very well. I mean, I know West Coast, US, California, or whatever. I mean, they don't. None of these people have restrictive covenants in their employment contracts, so they're very, very hard to keep hold of. And they have to pay them enormous bonuses to keep hold of the very best coders and move around. And I think you will see more of that in the UK. And the management teams we know and act for, they say the same to me, that they're always thinking about how to recruit, retain the best talent, same as any other business. But back to your question, I mean, in terms of themes, I mean, look, software generally is still obviously hugely hot in all its various kinds. So I mean, at the moment we see sort of lots of e-commerce, still lots of e-commerce type ventures doing various niche things within that kind of scene. Huge amounts of fintech. We act for a number of fintechs. They sort of challenger credit cards, even one challenger bank. Various people doing things with financial data of various kinds. Event tech, I think, is quite big at the moment. People taking events and communication generally online. I mean, obviously, at the start of COVID, people that used Teams and Zoom were a sort of fairly smaller subset of business life. And if you'd have told people 18 months ago that they'd be doing 100% of their BD and face-to-face stuff on Zoom or Teams, they'd have told you were absolutely crazy. And now
I know we'd probably all have retired by now.
No, it's all over. And it's possibly the ones that I think most people are getting pretty sick of doing video calls, or at least spending too much of the day on video calls. And but I think it's not going to go away. I think it's still going to be just a mainstream mode of communication going forward. So really, anybody doing anything there in terms of connectivity and taking those kind of things online is very powerful. And then there's the whole events industry, which is obviously shut down with COVID. There's a number of people were already building stuff to digitize bits of that, and obviously it's a great place to be now.
Very interesting.
Come out of COVID, and then the whole pharma, life sciences, everything else. The race to cure COVID triggered a massive sort of arms race in that space, and there's enormous capital being raised by the funds and then invested into all sorts of different ventures within life sciences, pharma, biotech, that side of things, and that's another great place to be. So as I said at the beginning, it's interesting, isn't it? Because obviously all of that is immensely positive. Bits of it potentially great for Great Britain and the UK, and there we go. But obviously, other bits of the economy much more struggling, and huge parts of it still on furlough or effectively shuttered until we come out of restrictions.
It's definitely showing to be a double-edged sword, isn't it, at the moment? Well, listen, it's been a real pleasure catching up with you, Henry. Thank you so much for joining the podcast today. And I'll look forward to speaking to you again this time next year to see if it's changed.
Yes, no, brilliant. Yeah, very good.
All right, thank you.
Cheers, Eleanor. Bye then. Bye.